My name's Jake. I'm the syndicate lead at Southeast Angels. You might have seen me today and also last year just running around like a headless chicken, but I do have a day job. I do things to do with startups, I promise. I help our angel members at Southeast Angels access, diligence and invest in startups more effectively, and in a process that we hope is proactive and keeps up with the founders. To give you an idea of what this looks like, we have about 100 startups a month that approach Southeast Angels each month. I look at every single one of them, believe it or not. And we get that list right down to a handful that we think our angels are going to be really interested in, and we tend to find that that works because each month there's usually a deal that we go ahead with a handful of our angels. As I've been in this role, I've been in lots of the conversations that where angels are sat around the room trying to explore what is valuable about the startup and also what is defendable. I've noticed in the last sort of year or two, the growth of AI has made that conversation a little bit more complicated. And it's not necessarily as easy to point at technology now and say, well, that's hard to do, because some things are getting easier. So I've put together a team of panelists, and we're going to discuss this later topic. David, should we start with you? Could you introduce yourself and what are you doing in AI at the moment? Let's start there.
Sure, yeah. Hi everyone, my name's David, David Houghton, and fun fact, Jake and I went to school together.
We did.
Who would have guessed that we'd both be up here when we're doing GCSE maths out of a porter cabin, eh?
Wait, so, were you in isolation then? Oh.
Damn, you caught me there. So I wear a couple of hats. I guess I'll get a plug in first of all. So I'm a founder and run a community and syndicate backing and supporting state school founders in the UK, which is similar to people like Jake and I growing up. But my day job, I am an investor at Antler. So Antler is actually now the world's most active AI investor, according to Deal Room in 2024. And we are a global venture fund with more than 17 funds around the world. We invest in more than 27 countries around the world. And our model's a bit different to typical investors. We invest pre-revenue, pre-product, pre-team, and pre-idea in some cases. We back individuals who are high potential people who have the drive, resilience, and all the traits we've heard about today to build great companies. So we come in at day zero. And later.
Excellent. Graham, introduce yourself.
Hi, I am Graham Cox. So I have been working in artificial intelligence since I finished my degree in the subject back in the very early 1990s. So 30 odd years working as a data scientist, AI developer, researcher, and also as an entrepreneur and business owner. I currently run an AI consultancy called Atacop, based here in Brighton. I have built and run several businesses before. I'm an exited founder. I am also an erstwhile angel investor when I'm not investing all of my time, effort, and money in my own ventures, as I am at the moment. And I guess I have my role in this panel because I have spent the last 2 years with Atacop working with primarily private equity-backed organizations, but nevertheless funded organizations that are trying to develop a clear AI strategy and understand how they can differentiate themselves in the market.
Excellent. And Selena?
Hi everyone, I'm Selena Abdullah. I'm the co-founder and CTO of Motex. So at Motex, we are building the AI operating system for private healthcare in the UK. So we do everything from automating documentation to phone calls to emails to billing. And prior to Motex, I did my PhD in electronic engineering. So I spent a lot of my PhD years researching deep neural networks and how we can make them efficient and high performant for medical devices. So I'm not new to this medical device scene. And before that, I also worked briefly in Intel, but I basically got bored of both academia and working in the industry. So I decided to become an entrepreneur.
Excellent. And we've let one founder in the room today, and it's Selena. I think this is the first time in a room where we've had 100 investors to one founder. So let's see how that goes for your race. Anyway, Graham, I'd like to start with you. Can you tell us a little bit about the current state of AI technologies and how that might be starting to affect things like defensibility just across the board?
Yeah, so from the perspective of investors, AI is both exciting and also very dangerous. So one of the things that we have built in Atacop over the last few months has been, as a result of the demand that we've seen from private equity, is a pre-diligence assessment. So providing an early look at a target to understand what the potential AI disruption risk is across the normal private equity hold period of 3 to 7 years. In other words, will this business model actually survive the investment period has become a very real conversation with organizations. And I see this from 3 key angles. The first is that particularly where the proposition is an AI first proposition or a technology proposition, the question is, will foundational models actually just subsume the business model or a core part of it over the next 5 years? So will foundational models actually be capable of doing the thing that this business is setting out to do? The second is that particularly for organizations who've got a little bit more under their belt, they're up and running, they've got product in the market, they're driving revenue, they have product market fit. What is the threat of new entrants to the market to them using vibe coding and the other accelerated approaches that organizations have access to now to get started, get underway, and to get into a competitive position? So competitive threats is number 2 from startups. And then the third angle is actually competitive threats from the larger incumbents, where we see the big players in the market that previously smaller organizations were able to diversify and focus on hyper vertical niches to retain their protection from the broader competition. I see these very big organizations putting so much money into AI and AI developments now that they represent a different sort of competitive threat. Good example of that, I think it was today or yesterday, is there's quite a lot of vertical niche CRM players that have their own particular data set and particular business that they work into, and they compete against the Salesforces and HubSpots pretty effectively normally by being hyper-verticalized. HubSpot have just announced a partnership with OpenAI, so you can now query your HubSpot CRM directly in ChatGPT, privately, obviously, in order to understand your own sales channel and market. And these kind of things are obviously impossible to deliver for smaller organizations. So, yes, multiple different reasons why AI disruption is something that you really need to consider when you're looking at a target.
And I want to discuss the impact on larger business a little bit later too. But just before that, David, Antler is an investor in Lovable, correct? Yeah. Could you tell people what Lovable is and why everyone's been talking about it the last 12 months? And what does it mean in terms of building products?
Yeah, of course. So Lovable is it's basically one of the most used vibe coding tools in the market. So we invested in Lovable towards the back end of last year when the company was just formed, and they're now 7 months old and they've just hit $60 million of annual recurring revenue. I think they were the fastest company ever to hit 50 million, and they're on track to be the fastest company ever to hit $100 million later this year. So Lovable is, I used it on the train down from London actually. So on a train down, which took me just over an hour, I built with very little technical experience a front-end, back-end web app which will help me connect my founders to my investor network. And it's functional, it's deployed, it has a back-end powered by Supabase, and it took me probably less than 45 minutes to get all of that completely deployed. So those, I guess, are the stakes that we're seeing now. The barrier to entry for building software is so low compared to what it was 3-4 years ago.
And what does that mean for Antler founders when you assess them now? They're coming to Antler to go for an accelerator, then they're probably going to raise funding. What are the expectations on founders now that if everyone can code almost?
Of course, yeah. I guess the barriers to entry are so low. We're shifting our focus significantly more towards distribution. So the winners will be those who execute better and have the strongest distribution. And that's, I think, true for any kind of business now. Whether it's an AI company or a B2B software company, it will all come down to distribution and the unique edge that founders have to get in front of the right customers to sell quickly. Because iterating on product is literally just a single sentence piece of text that can edit an entire application.
So prompt to app is essentially what we've got now.
Exactly.
Amazing. Selena, coming to you as the only founder in the room, you're in AI healthcare. How are you approaching building defensibility when you think about the next 5 to 10 years in your company?
I think in terms of defensibility, being in a regulated space like health and finance, for example, they can actually give you that barrier for other startups to enter healthcare and finance. The other thing that we are looking at in terms of defensibility as well is compliance regulation, medical device regulation specifically for a health tech startup. Again, as David has said, it's very easy to build apps these days, but it's very hard to ensure that you make sure all these large language models don't hallucinate, that they are safe to use in clinical scenarios. So these are some of the things that we need to think about. And besides that, also having that niche data set for very niche verticals that you're operating in. So for example, within healthcare, we are specifically focusing on allied healthcare, for example. So we have a lot of very niche data set that we've collected from MSK clinics. So these are some examples that we are building defensibility within Motex.
Interesting, okay. And Graham, just coming back to you, some of the conversations we have as angel investors, the ability that the startup has got, the unique advantage, is sometimes that they're in a market full of larger, older businesses, and their ability to move quickly is their advantage. Or build particular technology. If we look back at mobile banking, Starling, Monzo, Revolut built great apps when the traditional banks couldn't, and then they kind of built some room in that market. Do you see larger companies being able to adapt more quickly now? And is that a problem for startups, or do you still think that tension is kind of still there?
So I see the opportunity for larger businesses to move more quickly. I'm not sure that I see the evidence of it happening at scale. So these tools and techniques are entirely democratized. Anybody can use them, from the largest companies in the world to the smallest companies in the world. They are at a stage where prototyping and developing early stage applications is incredibly faster, simpler, and cheaper than it ever has been before. Building high performing applications that will operate under load for tens, hundreds, thousands, millions of customers, that's not so easy still. You're not going to get an AI to do that for you, and expertise still matters. I see there are tools coming on the market that allow larger organizations to automatically refactor and update legacy code bases, which should in theory give them the ability to refresh, renew, and move at a faster pace. But it's very early in that market. My view is that technology startups still have absolutely an edge when it comes to starting something new, something original, something creative, and driving forwards. Where I think the caveat to that is around quality and scalability. So getting to an audience can be done faster than ever. Retaining that audience and building upon it and allowing that business to scale still demands things like strong governance, as you've just been saying, whether that is in a regulated market like healthcare or not. The way that we use personal data does have legal restrictions around it, and people ultimately still buy on trust, and building a quality operation matters. Building a system that will actually scale when you succeed in selling matters, and building those foundations is fundamentally important. So when I'm looking at small businesses, I always want to see that there is still a very strong technical underpinning a CTO or whoever in an organization, as well as the domain expertise that allows them to operate in a niche in a way that other people can't. For me, that remains that key crossing point is where success happens. Without that mature technical co-founder who understands things like governance, trust, and scaling, performance, etc., then struggles will happen fairly quickly on, regardless of how good the third-party outsourcing development team that you use, or regardless of how good you are as a vibe coder and able to get things off the out of Lovable or Cursor or wherever it might be quickly. I would personally still recommend, as angel investors, that you look for that cross-match between domain-specific expertise, solving a problem that other people don't even understand, let alone know how to solve, and that technical capability to say, I may not build and do everything myself, but I know what good looks like, and I know that I can build the company upon that.
Interesting. And David, at Antler, how are investor expectations changing when they're assessing founders? What's the level of expectation they have in terms of traction, for example? I mean, you're really early stage, but are you expecting founders to get further before they raise?
For sure, yeah. The goalposts are shifting significantly for pre-seed right through to Series A, especially, as I said, now that it's so easy to iterate and build product, it's distribution. So what we're benchmarking is the quality of a founder or a team's distribution, and that typically is traction metrics. So at pre-seed, I think for majority of founders, unless you're a repeat founder and have raised and scaled or exited a business, pre-seed funding now has expectations of hitting somewhere around 10k of MRR for a larger pre-seed funding round, if we're talking in the, over £1 million in the UK. Seed rounds, we're talking somewhere between 200,000 to 500,000 of annual revenue, and Series A rounds, we're expecting 2 million these days, just because it's so easy to build.
Interesting. Selena, how are you approaching both funding rounds, but also the investment you bring in? Is it being spent the same way that it was 5 years ago when we think of software costs and talent and headcount? How are you approaching building your business in the era we're in now?
So fundraising for us obviously has been really tough, especially now. We are expected now to deliver seed to Series A sort of traction at a pre-seed stage. So now it's kind of expected that you have revenue, sometimes even profiting at a pre-seed stage. So that's now becoming the norm from our experience. In terms of how we are spending investment these days, most of them are being allocated to sales and distribution now. So we can now build a lot more with a smaller tech team. So that we are seeing a shift where a lot of startups, they are now investing more into sales hires rather than technical hires. And we are doing the same in Motix as well.
And as you scale, how big does your tech team need to be? And because I mean, so many times our investors think, okay, we'll put in 100 grand. How are you spending it? Often there's a software team to pay for.
Yeah.
Will that be the case in a year's time, 2 years' time? To what extent does it scale as you grow?
I think it's not going to scale exponentially. So even with a team of 10, you can still build the features that you need to build, unless you are trying to scale your product set. So if you're a company that's building multiple different products, you probably need a product lead in managing every single product. So it really depends on what your roadmap is. But I think in conclusion, you just need probably one product lead and maybe a few software engineers. So basically have very small teams managing multiple different products. Each product, sorry.
Excellent, thank you for that. And a question for all of you, I'll start with David and then we'll kind of work our way down. We have these really large companies that are building these foundational models, Google, Anthropic, OpenAI. Each time I sometimes assess a startup, it appears to be a sort of a wrapper on what is essentially this foundational model. Sometimes when there's a lot more expertise involved, it goes much deeper, but it looks like a lot of tasks are getting done on these foundational models. What areas do you see where there's still lots of opportunity, where these larger companies won't go, in terms of how far down they'll come to people's problems and tasks?
Yeah, it's a very good question. I guess now that we've got so much open source foundation models which are performing very, very well at multiple different tasks and more complex tasks, we're seeing a shift away from proprietary data being the moat to proprietary reasoning being the moat. So how companies are using their data, and even synthetic data. Synthetic data has become such high quality that it can be used for fine-tuning these models. The real advantage now for us is what is the domain-specific reasoning that this business is able to produce from the data and the use cases that they're trying to develop.
Just explain what you mean by vetted data.
Synthetic data.
Oh, synthetic data.
Synthetic data, sorry, yes.
Cool, got it. Graham, what about you?
So I'm not sure if I completely agree with that, I have to say. I think data remains a moat. It's just that generative AI is not actually frequently built on data. A lot of generative AI solutions are built on the inbuilt capabilities and knowledge of an LLM. But where you are building niche solutions for niche customer bases, that niche data remains absolutely critical. And synthetic data, as in using an AI to create data, is of course absolutely possible and a very important technique. But you can't create synthetic data unless you've got real data to work from. Otherwise, the data is probably completely meaningless. So I still believe that data remains a moat in particular circumstances. So clearly not for, if you're creating marketing copy, then every LLM in the world is going to do a great job. You don't need any data to do that. But for some circumstances, then it really matters. I think other areas where I see areas where the big generic foundation models aren't going to go, it comes down to niche and expertise. So a model in itself might take you 80% of the way to a really good solution, but the remaining 20%, that gap in its specificity, for example, for medical use cases, for example, you're probably going to find that a specific data set and fine-tuning of that model and the ability to train a model for that specific purpose is going to give an edge. And there will always be specific niches where these models aren't going to play to. Building workflows that are delivering for a very particular use case in order to drive a specific function that people are willing to pay for is something that is going to remain an area of domain expertise and one in which there is always business value to be gained. That might require agentic solutions, which is, of course, the big buzz in the AI industry of the moment, and workflow solutions that start to drive semi-autonomous action across a range of very customer-specific environments. I see the frameworks for that as being where the foundational models will provide the horsepower behind it, but turning that into value for the end organization requires a startup, again, with that specific domain expertise and that technical knowledge to be able to drive those models to advantage. So, and of course, the models themselves, as you rightly said, David, there's very little differentiation in many ways between them. A good OpenAI model versus a good Meta model versus a good Google Gemini model, they've got some edges here and there, but they're largely the same. There's no specific IP moat inherent in the foundational models. It's what you do with them. And I believe opportunity will always exist in seeing that specific domain application and knowing how to deal with it.
Interesting. And Selena, what about you when thinking about kind of the main models where I assume you're using open source models and a mixture? What's the added value on top of those that you're creating in Motix?
So I agree fully with Graham. So I do think there's a lot of opportunity still in using data as your moat. So a lot of generative AI solutions, like Graham has said, they are built on top of LLMs, and LLMs are language models. So these are, they are trained with existing text that you find on the internet, in textbooks, whatever. But we do not know. There's no data around, for example, when will your patient that just recently had a knee injury come back to your clinic? Like what are the satisfaction that we can see from a patient if we recommend this sort of treatment versus that sort of treatment. So these are very niche data set that can be proprietary to startups. And sorry, what was the other question that you had?
I was mainly asking about how the main or the large companies have models that are very skilled, and how much value can you create on top of that?
Yeah. So again, with the niche data.
Yeah.
So obviously, we can plug and play existing model providers out there like Claude and OpenAI, ChatGPT, for example. But we are firm believers that it's still useful to have your own model that you have trained with your proprietary data set. And I think that could be, that is a huge differentiator for startups. Everyone nowadays, we can just easily use GPT-4, for example, to automate documentation or automate email replies, but how do we make sure that we capture the specific workflows of clinicians and their styles, for example, their preferences. These are things that data that we collect to fine-tune our internal model.
Interesting. And David, just coming to a close shortly, but I'm interested to know, are you seeing some investors or some founders actually move slightly away from AI because it's so crowded and look at more physical industries? Has that been starting to come through Antler, or is that not really happening? And how do you see that developing over the next few years?
Yeah, definitely. Physical AI has become the buzzword of tomorrow, I'd say. We're seeing more and more robotics companies, more and more hardware companies. I think a lot of that stems from the American dynamism trend of last year. Manufacturing or sovereign manufacturing, ownership over value chains and supply chains. And I think we're going to see it more and more in Europe and the UK especially, as we see the distances created across different geopolitical spheres. So yes, we are starting to have to take a different approach to hardware investing. Historically, something that VCs would shy away from, but we're trying to understand how we can see VC-style returns for hardware businesses more and more, and AI makes that a lot easier.
Interesting. And just as a final tip from all three of you, same question is: how do we? How can angels assess the defensibility? What is the questions that they need to ask the founders or do as part of their own research to find that nugget? We'll start with you, David. Sorry, I'm looking at you. Sure, yeah. And then we'll work our way down.
I'll go back to the distribution piece. What is the unique distribution edge that you have? If you look at big AI, so I believe that OpenAI will win because they're integrated with Microsoft and have a huge distribution layer there. If we look at vibe coding, Lovable, take that example again, I've seen probably 10 Lovable copycats emerge in the last month because it is literally so easy to build or replicate what Lovable have done. But Lovable have a huge community and a huge distribution channel through all venture funds or developer communities around the world, and that is why they'll win. So I'd ask yourself, what is their unique distribution advantage?
Graham, what about you? A tip from you for finding defensibility?
Yes, trying to think of something to add to that is actually meaningful. So we have a decision matrix for looking at AI disruptive capability, which I'd be very happy to share with anybody who wants to get in contact with me, which you can use as a primer for thinking about this. It's built, as I've said before, for private equity, but I think it has direct applicability in the earlier stage markets as well. It's got a number of key elements in it. We don't have time to go through them here at the moment. I will just come back to the point that I've made a couple of times now, which is where I think the thing that still makes propositions special is that combination of specific domain understanding and expertise married with the ability to execute, which for a technological startup, an AI startup, means that they have AI skills and capability in-house. And that, for me, like you always hear in all of these meetings, it's all about the people first and foremost. It remains true. If you get the people right, married with a good idea, they've got a strong chance of being investable.
And Selena, a tip from you?
I think being a founder of Motix, I may be a bit biased, but,
yeah.
But I think everything that you tend to assess still stands. So obviously, who the founders are, what sort of background did it come from, but probably the ability to build products are now a prerequisite. So it's less important now. So everything else, distribution, founders, I think all of that, traction, all of those still stand and should still continue to be considered when you're investing.
Excellent. Well, thank you so much. This has been such a fascinating discussion. I think a practical standpoint is maybe you should all just have a go at Lovable and see what you can build. Maybe on the train back, have a prompt to app, see what we can do. But thank you so much. Please give it up for our panelists.